All right, guys. So what has happened? The Bears, we were just talking before we hit record, and you guys were saying Bears have just gotten absolutely demolished in a lot of markets. What the hell is happening?
F your puts. The Bulls have won.
Have they though? What's
uh,
the latest? I know so there have been hundreds of billions of dollars in short liquidations across stocks and crypto. What's causing that?
well, it's the economy. I mean, the economy does not look so bad. We've got a lot of good things happening, believe it or not. And this no longer looks like just a bear market rally. Just this past week, we've seen pretty good data out of a few companies that have reported earnings like Darden Restaurants, KB Homes. We've also had CarMax and a few others. We get Nike later this week. We've also had some pretty good economic data in the US. We've seen that durable goods orders were higher than expected. We've seen the housing new sales and existing home sales higher than expected in the past month. So it's hard to say that things are looking bleak out there when it looks like things are actually improving.
So this
How
is kind of
dare you say something positive, Travis?
this is, I think, the cognitive dissonance that people are having is like, how is this possible? Because we've got a massively inverted yield curve and so much bear porn everywhere and fear mongering. Like, are we really out of the gate of a recession, or could this be a double top or just a really deep pullback? Or do you guys think this is truly the start of more economic recovery and expansion and all that good stuff?
Well, we've still got to fight the Fed. And that is no small task because the Fed is still out there talking tough. They still want to raise rates more. I think there was a note out from a Morgan Stanley strategist this morning saying that they actually do think the Fed will raise rates at their next meeting in late July. But if you look at the inflation data, the Fed is doing their job. They're getting it done. I mean, I don't even know, honestly, if we can ascribe what's happened to the Fed primarily, but inflation numbers are categorically like coming down. Like it's very clear. And so the Cleveland Fed says that they're forecasting the June CPI data, which we'll get in a couple of weeks, that should come in again much lower than the previous month. It'll come in around 3.22% potentially. So these inflation numbers, that is a big part of the story too, getting better. And the economy just really hasn't weakened the way a lot of us thought it might. And frankly, I've been a little surprised too. Honestly, things have performed a lot better than I expected. We did have that scare with the banking system in the spring, but that's really calmed down quite a bit as well for now. So the big risks out there still, of course, is the Fed being behind the curve and being really stubborn. But beyond that, at least in the US, things look pretty good. Now, in Europe, it's a little bit of a different picture, but as far as the US goes, it's looking pretty good when we look at all the signals.
So taking a look here at the yield curve, though, I mean, this is massively inverted, and this is, I think, one of the more reliable indicators of a future recession. The hard part with the yield curve, though, is timing, right? So are you sure this isn't just a fake out? Where are we in the grand scheme of things? And is this a bellwether, or is this something that could be like divergence that could just get run over?
It is important to remember that if you look at all the historical yield curve inversions, the yield curve is not a 100% accurate predictor of recession. Now, it does tend to be a pretty good predictor as far as the ones that we have out there. But the yield curve is basically telling us that it does expect inflation to cool, and it doesn't really say that necessarily economic growth has to go negative. So it is important to note that. Now, again, the yield curve inversion is very, very steep. It is historically steep. And so that is something that a lot of the yield curve watchers are still focused on. And I think a lot of it will come down to how flexible is the Fed. And then also, are we able to contain inflation from spiking higher again if we do get into a better economy and improving economy? Because what we saw in the 70s, of course, was that we thought we had inflation under control at a certain point, and then it spiked back up again. And we had another stock market sell-off in the late 70s. So we'll have to see. I personally am becoming more optimistic. I still have hedges on, but those hedges have frankly been losing me money. And I can't ignore the data in front of me. And in fact, I focus as a stock geek, I focus on what companies are saying. And when you listen to what they're saying, it does seem like business is still pretty good, if not getting better. So it's hard to ignore
Did you
that.
see that Delta came out basically and travel is still booming? I tweeted today the TSA numbers, and basically we're still seeing TSA numbers above pre-pandemic levels on most days. I put in the red boxes the days where we're higher than the pre-pandemic levels, and the ones that weren't higher were pretty damn close. So basically, we've got airliners still seeing a bunch of travel demand. We're seeing the TSA numbers confirm that. And what that does is people that are traveling, they're, going to be probably spending money. They're still spending on services. So we're still in that services over goods economy. But, as we saw with the durable goods data today, which Chris, you can pull up a Coifin chart on that. We've got that in the doc, and basically durable goods are positive, I think, for the third time.
That's right.
So,
yeah. Third month in a row of sequential improvement. So maybe the good side of the economy is even starting to stabilize here.
yeah. Yeah. And of course, right, everything kind of goes back and forth. We had this extreme goods economy. Now we're moving into an extreme services economy. And now could we maybe be moving into like a nice mix as people that binged on goods already did their traveling? Maybe they're looking back at goods again. And there may still be such a backlog of people that haven't done all the traveling that those numbers are still strong. So maybe we're moving into a scenario where we kind of start to see a nice mix of goods and services again, to be determined. But really, the things that we need to pay close attention to, I think in terms of, is inflation going to spike again, Trav, like you kind of mentioned, like it did in the 70s, we need to watch the housing market. We need to watch the real estate market because people are buying homes. And I'm hearing a lot about bidding wars again. And
Oh, no.
if we see people, you can have prices come down and still have, bidding wars, right? Like there's probably still a little bit of that happening in the markets that even are a little weakened. But are people going to be going back out and furnishing homes and spending money at, different types of furnished stores? Like your West Elm or your, Williams Sonoma or whatever, are we going to see that again? And is that going to push the goods side of things kind of back up? So again, like I've said it over and over and over and over again, we still continue to have this tug of war. It's been absolutely flabbergasting watching the bears stare the positive data in the face and continue to say, this makes no sense. It's too optimistic. It's too positive. It's like, can we just agree? I tweeted about this earlier today. It's been so frustrating. It's like, can everybody just agree that there's good data and bad data, that the risks aren't off the table, but we are seeing better data than expected. We are seeing even better earnings than expected.
And that's
why? Yeah, go ahead.
Oh, sorry. Yeah. Sorry to interrupt, but I was going to say that's a really good balanced viewpoint. And Chris, I know you're a big fan of price action. And if you look at the price action, the viewpoint is less balanced, but in favor of the bull case. The price action in crypto and stocks is saying new bull market. Now, maybe commodities is the one area where you could say there's some mixed signal. But as far as crypto and stocks, yeah, I think the price action.
Well, look at lumber. Like lumber's starting to spike again.
Yeah, we'll jump over to commodities in a second, but let's start by taking a look at the NASDAQ. And one thing that's really interesting that I've noticed over the past like 5 years or so is every time the market has started to pull back, the bear fear narrative has just been kicked into high gear. I've noticed it ever since 2018. And you can see here over the past couple of years, as the NASDAQ, I'm looking at the weekly chart, has pulled back and it was down about a third. And then earlier in the year, we started to recover. And I saw a lot of charts that were showing like the 50% pullback. And, I even posted a chart showing like the correlation and the people that were talking about why this was a guaranteed bear market, because this is what happened in, the tech bubble of 2000. But as we know, just because something happened in the past doesn't mean that it has to play out that way in the future, right? And so I think what happened, and where we started to see a lot of the short liquidations come in, is when the NQ broke up here about a month ago, or really like 6 weeks ago in mid-May, broke up above the 13,500 level. That's where the squeeze started to come in. And you can see over the past several weeks, we've just had a straight run. And now we're really at that last level where if bears have any chance, this is where I think it's going to come in. It's the 78.6% Fibonacci retracement from the all-time high. Anything above that, I mean, look, we're only a few points off of the all-time high at this point, about 7 to 8%. But what I think is even more interesting is look at the ticker is NY FANG. So this is like the FANG Plus index, which is super interesting because this is where most of the gains in the stock market have been. And you can see this index is actually testing all-time highs. So where, and we've been talking about this for quite a while, and still like the small cap, like Russell 2000 is still way off of all-time highs. And the big question that I have is, are we going to see a rotation? I mean, look, this is like still like 23, 24% off all-time highs. Are we going to see capital flow from large cap into other sectors, or, what's going to happen there? I wanted to get you guys' opinion on that, but it's just really interesting to see the sustained bullish price action, not just in stocks, but as Trav said, also in like the Bitcoin price, right? Like we've just had run retracement extension to the upside, and have really seen just systematic growth. And we can talk about Bitcoin and the ETF situation and all that, but it just seems, like across the board, bears have just been getting clobbered. And I even tweeted a few days ago, I said, look, guys, it doesn't pay to be a perma bear, right? Like markets over time go up. And like, if you just bias yourself to that side over time, like you're going to make a lot more money. So I think this is just an example of that.
Yeah, well said. I think interestingly on the stock side, what I've seen too on days when the tech indices and the mega cap tech stocks actually take a step back, those days we've tended to see rotation into small caps, rotation into financials. We even saw real estate and REIT stocks rallying quite significantly this week so far. And that is encouraging, I think, if you're a bull, because it does suggest that, capital still flowing, that, even when you have a healthy pullback in some of the stuff that's run a lot, you're still seeing flows into other areas of the market. And so that, I think, is encouraging for the bull argument as well. And like you said, I mean, it's really hard to say at this point that, you should favor the bear side. I just don't see enough evidence for that at the moment. Now, we do, of course, always have risks on the table, right? We had a weird geopolitical thing over the weekend with Russia. We've got, certainly things with the Fed and inflation are still somewhat question marks. But overall, I mean, it looks pretty healthy. I mean, I think there are some stocks where there's a lot of short covering and maybe some overly enthusiastic buyers, but broadly, we do see a little bit more rotation in some of the sectors that we're watching in the stock market.
Yeah. And also I will say, just from like a price action perspective, like it does feel like we're a little overextended here. So I wouldn't be surprised to see a pullback. We already started to see a pullback over the past several days, but today specifically, I'll just pull up the daily chart. We're getting a little bit of a bounce. So last week was actually like a red week, but it was really just a small pullback in the overall breakout that started to happen in mid-May. And I mean, it just, when you look at the price action, it's just like consistent, systematic buying, and you don't want to fight that.
I do want to point something out. I brought this up in the wealth building community on our update, that there is a lot of money in money market funds. I think over $5 trillion at this point. We saw a recent, large spike in money going into money market funds due to interest rates increasing, so that's been helpful. But something that I've been thinking about, and I'm starting to kind of argue for it more and more, is first of all, the pullback in the NASDAQ has been extraordinarily shallow. The pullback in the S&P 500 has been shallow as well. We'll see if this bounce today follows through to confirm that pivot low. But if we see shallow pullbacks in the S&P 500 and the NASDAQ, what that is telling me is people might be starting to rotate money, into the market. And there may be enough people that kind of have fear of missing out from here. They've seen the strength in the indices that was very unexpected. They've probably got a lot of cash on the sidelines. And that is where, that rotation that you speak of, I think that the money market fund cash could have a piece to do with the bid that gets put in the S&P and the NASDAQ. So that's why I'm watching the pullbacks closely, because if they are shallow pullbacks, that's just going to cause even more FOMO from like the trader psychology, side of things. As a lot of people sit in their cash, yes, they're earning, money, they're earning interest because of the Fed having rates so high, but at the same time, people want, that market return as well. That's usually higher than what they're going to get, from treasuries. So that's something to consider too, is how do the flows out of money markets look going forward? Like I'm going to be keeping a close eye on that, because that'll be also a sign that maybe people are moving back into equities, and maybe the FOMO keeps the market bid.
Imagine the flows that we'll see if rates actually come down. Imagine when you can't get 5+% on money markets, when rates normalize. So I do think that's one of the reasons the Fed is trying to stay up at higher rates for longer, like at higher levels of real interest rates on the fixed income side, because that wealth effect of, the money flowing from money market funds into stocks and pushing up stocks and crypto values, that will sort of work against the Fed's fight against inflation. So it's going to be really interesting to see how this plays out in the next 6 to 12 months or so, because the Fed is in a really tough spot. They're gonna look silly and behind the curve if they stay up at high rates with inflation numbers coming down. But the minute they start to actually reduce rates, you've got a real problem working against them. So really tough spot to be in for them.
Yeah. It's
what
weird,
if the
right?
economy can actually sustain with rates here? Like maybe we'll be
so far
okay.
so good. Yeah. So far so good.
Yeah. And like, think about from a behavioral standpoint and just a mental standpoint, everybody was really stoked about getting 5%, just sitting in cash, right? But then you look at the markets and it's like the NASDAQ's up 37% this year. Bitcoin's up over 80% this year. So people have felt a little safer, I guess, quote unquote, just being able to sit in cash. But then again, yeah, that FOMO piece could really kick into high gear. And maybe that's where I become a little bearish though, because if you get retail that's starting to FOMO and it becomes another crowded trade, then maybe we do get kind of a bull trap and, some kind of squeeze low, not squeeze, but some kind of pullback lower to trap all of those undisciplined people that are chasing these gains. I just get really skeptical whenever I start to think that, hey, prices are already up so much and markets can run way longer and way higher than seems reasonable, but my risk-o-meter just starts to kind of buzz a little bit louder whenever we're in this type of situation. So,
but the big question to that is, do we see a new low, right? Like, is the low in? That's the big question on everybody's mind, is that. And we'd have to see some pretty bad economic data, I think personally, to see a new low up from 2022.
Yeah. I like to look at, let's just take a look at the yearly chart. And I don't use the yearly chart to like trade on, right? But I do look at it for large areas. And when we look at the NASDAQ, you can see that, the 2023 candle basically opened at or really close to the bottom of the year, right? We took off right from like the jump in January. And we're basically back to getting pretty close to multi-year resistance, which was the close of the 2021 candle and the open of 2022. So the past few years have been really volatile for stocks, right? Really big trading ranges. And the question that I have is, okay, here we are coming up on the halfway point of the year. And what is this candle going to close? What's the close going to look like? Is it going to be inside of this prior 2 years range? Is it going to dip significantly down? I doubt that at this point. I think the lower probability would be that this candle actually turns red. I think support is in. I think it's also not as likely that we break out above this new all-time high. If that does happen, though, I mean, a short squeeze is certainly on. I think probably the highest probability situation is that we actually stay inside of last year's range. That's just kind of my thinking from a TA perspective. Do you guys have any other points or anything else that you're seeing on the charts?
I think it would be pretty healthy if we stayed inside that range. I don't think it would be super healthy for us to have enough of a squeeze to go, beyond last year's high and get back to silly valuations and be at a place where the Fed's really going to start to try to work against us again. So I think it would actually set up pretty nicely for, the years ahead if we do have a reasonable candle close this year.
Yeah.
Reasonable is a funny word because the NASDAQ and Bitcoin, like you said, are already up so much, but I'd like to not get back to an environment where we're seeing, junk stocks trade for 20 or 30 times sales. That would be a little bit, I think, aggressive.
Yeah. Yeah. And then on the Bitcoin side, we're also kind of at a major level. We're still well below last year's high. So we do actually have more potential upside in Bitcoin, but we are actually still sitting around a major multi-year resistance level too. So that's why I just think this 30, 35K zone is such a major level. And again, my question is, I'm always thinking about, these yearly candles as big what if situations. Like, what does this look like 6 months from now? And then obviously we don't trade on that. We drill down to like the daily chart to look for setups and for entries and exits. But that's where everything starts, is with that like 30,000 foot overview. And, I'll just say, based on, and I've talked about this quite a bit, the narrative from prior market cycles, and also the timing based on the halving that's coming in next, looking like the end of April 2024. And I always like to remind myself and think back in history about like quote unquote realistic prices, and I'll just read a tweet for anybody that's listening to the audio. In early 2013, when Bitcoin was at $100, we thought 1,000 was a wild target, right? And then it went there, but then in 2015, Bitcoin died. Everybody was writing all the Bitcoin obituaries. But then in 2017, it came back. And when it broke above $1,000, we thought $10,000 was a mind-blowing profit target. But it hit that and then some. And then in 2019, guess what, guys? It died again. Then in 2020, it recovered again and broke 20K. And then what happened is something a little weird and different. Everybody put laser eyes on their profiles and assumed that Bitcoin was going to 100,000. And it became a crowded trade and it trapped everybody. It fell short of those mass herd mentality expectations. And then it died again in 2022 when FTX imploded. But funny enough, that was the market bottom, was the FTX implosion. Now we're within a year of the next halving, and the bull trend has actually been developing for 6 months already. It might not feel like that, but that's what the chart is showing, right? And so my question is, all right, what is the narrative for 2024 going to look like in the history books? Is this going to be the year or that time period pre and post halving where we do finally get to that 6-figure mark? I think the next 6 to 12 months are going to be massively important for Bitcoin. And it's either going to keep on track with the whole stock to flow ratio. And, let me see if I've got the chart pulled up here that, I posted this chart in the wealth building community, just looking at some timing that I noticed. There's been major market shifts in Bitcoin about every 218 or call it every 220-ish days. from where we had the first top in the spring of 2021 to the double top, and then the FTX panic bottom, and then the start of the bull market. So according to this kind of timeline, I think that we could potentially have an all-time high test somewhere around early October of this year. And then by the halving in late April of next year, I think it's reasonable to expect maybe a 1-to-1 measured move of this prior range, which would put us around 125K a Bitcoin. Now, I'm historically really bad at anticipating the upside potential of Bitcoin. And I think it's easy to underestimate what it can do during bull markets. And this certainly isn't financial advice or like a prediction. This is just a model of a way that I could potentially manage positions for myself. Like looking at, hey, if I take a breakout trade and we're in line with one of these kind of time zones, here's some expectations. And I could look for like profit target confluences around these zones and around these timeframes. So this is kind of where my mind is, right? We've had bull market structure shift in Q1. We've had price action holding up beautifully. And we've got a kind of fundamental reason why this bull market could continue. And until price action proves me otherwise, I'm sticking with it.
This
Well
is
said.
a huge technical level. When you had that chart up, I was glancing, and we are basically pushing into probably one of the largest breakout levels we've seen in a while, right? So
Yeah.
if we do see this thing break out soon, I can only imagine what that's going to do for sentiment for the crypto community after everything that they've gone through.
Mm-hmm.
Yeah, I mean,
over the past year. I can see this being big.
Yeah, I think if we break 35K, which if we're looking at a weekly chart, this like you can see, and it's not an exact price, but it's this major price level that was support in 2021 and then has been resistance, right? Call it 30, 35K. Once we get convincingly above this, and this is like the 100 period moving average on the weekly chart, there's really not a lot of overhead resistance in between 35 and the all-time highs up here in the mid 60s to 70K. Excuse me. So I think that if we break that level on strength, we could basically be looking at something like what happened back here in late 2020 when price broke that 10 to 12K zone and went from basically 14K to 65K in just a few months. So will that happen? It's yet to be seen, but that's what the bull case is. And that's how I'm going to manage positions and expectations and look for, bull market type setups, dips, breakouts, that type of thing. If we break 35K, I just think, all signs are pointing to the upside. Obviously the caveat there is a black swan event, but I think, whenever we're thinking about fundamentals right now in Bitcoin, we've got BlackRock, we got Fidelity, you got Charles Schwab, you got all the big incumbent Wall Street old school players that are really throwing caution to the wind and going all in on Bitcoin and trying to scoop up what they can from the fallout of FTX. So in the event of a 35K breakout and potentially an upcoming ETF approval and people knowing what happened to gold in the early 2000s, I'm having a hard time really seeing the bear case for Bitcoin right now.
So basically the bear case for Bitcoin and the bear case for stocks feel like kind of a little bit of a stretch. Maybe more so for Bitcoin than stocks. I think the bull case for Bitcoin is probably a little stronger, maybe, but that's kind of what we're coming to, is the bears are really having to fight hard for their case here.
Yeah.
Across the board.
The caveat for Bitcoin would be if stocks dumped off and then Bitcoin went with it. But let's say that stocks did have like an aggressive pullback and Bitcoin went, you know what? I'm cool doing my own thing, and it continued trekking higher. That would be like best case scenario, is to see like a decoupling in that direction where Bitcoin just bucked the trend and was like, nope, we're in full bull mode like we have done several times before. That's what I would like to see.
Man,
See if
too
it
big.
happens.
Oh, are you trading around this breakout level in Bitcoin?
Yeah,
Are you going to be doing
I'm
some actionable? Yeah.
I'm zoned in right now. Yeah,
Nice.
yeah,
It's
Love it.
pretty. It's pretty for it's that price action is pretty. Got to
yeah.
give it to
People in
you.
the community know. Yeah, I mean, we've got the setups ready to go and been thinking through things and mapping them out, and yeah, that's all you can do.
Awesome.
Yeah. You guys want, so we actually have quite a few questions submitted, both from YouTube and on Twitter. You guys want to start hammering through some of those?
Yeah,
Let's
let's
do
do
it.
it.
Okay. I'll do this first one. Since it's basically what I was just talking about. Um, Luffy was asking, what part of the market cycle are we in for Bitcoin and crypto? Well, for you guys that are familiar with my market cycles that I started talking about in 2015, I think we're in phase 2. We're in the early trend. So we are out of the initial accumulation range and we're starting to see signs of that sustained trend with runs higher than retracements, extensions to the upside. So yeah, that's where we at. That's where we are at. We'll keep that
That's
real
where we
simple.
at.
That's where we at. Nathan Young was asking, it'd be interesting to hear your thoughts on how resuming student loan payments may or may not impact inflation in the economy with money being redirected into loan payments. That has to be a large sum of money no longer going into consumer spending.
Yeah, I actually spent 2 hours today digging into this data. I tweeted, Chris, if you can pull up my most recent tweet. What I did was I looked at the borrowers by age group, and then I looked at the basically the balances, how much student loan debt by age group as well. And what I found was basically the 24 or younger crowd, they hold the least amount of the student loan debt. It's the chunk of the debt is the 24 through 49 crowd. Now, what's interesting about that is you just passed it. It's the first one right there. Yeah. So what's interesting is the unemployment rate of kids 20, I don't want to say kids, sorry. I'm aging myself here, but young adults 24 or younger, they have the highest unemployment rate. It's, I think, 6.3%. The people that hold the majority of the student debt, they have the lowest unemployment rate at 3%. So basically, the majority of the people that hold student debt, they are very much well employed. They have a historically low unemployment rate. So that begs the question, who's going to be the troublesome borrower here, right? Who's going to be the person that really can't pay back the debt and it really eats into discretionary income significantly? Well, your 35 plus crowd, they probably have pretty solid jobs. They might be a little bit more established in their careers. It might not affect them as much as 35 and under. So I'm thinking the crowd 35 and under is going to have the most trouble. But how much in terms of a percentage of those people will it be, right? Maybe 50%. So we're seeing some numbers that like 100 billion, it's going to affect consumer spending by 100 billion, which would be very significant. But by my numbers, kind of back of the envelope math, I'm thinking maybe half that. So will it put a dent on spending? Yes. But I think that it's possible that it might not be as extreme as people are predicting. So that's my take on it. It is something we need to pay attention to, but it's not a nothing burger. It's a something burger, but it's not like the end of the world, basically. That's kind of my take on it based after looking at everything.
Awesome. Well thought out. Yus was asking, which one do you choose? Number one, live financially free with 500K in an affordable country, or go ahead with a 9-to-5 full-time job in the US.
Oh, wow. This is a good question.
I'm 35 years old. So basically you got 500K, say, screw it. I'm going to go live on the beach somewhere affordable, or continue working a full-time job in the US. Trav, what do you think, man?
Whoo, that's a tough one. It's it's hard to generalize. I think you have to make that decision for yourself. You know, I think it also depends on the stage of life you're in, right? Like if you're married and, you know, you're looking to potentially have kids in the next couple of years, that's going to be a totally different calculation than someone who's 22, who can travel the world and have amazing experiences for a while and not have to worry about kind of settling in. And so I think it's so much of it depends on your stage in life. I don't think there's a right answer or a wrong answer here. I think both can be amazing and helpful to someone's life and career, but it really just depends on your end goals and your phase in life. I know that's a cop-out answer, but
No, that's all right. I mean, look, I think my initial thought is, look, 500K anywhere in the world, if you're 35 and you've got another 30, 40 years of potential, you know, ability to work and create more money, that's a lot of time and not a lot of capital for that time. So like if you were able to go somewhere and have a great quality of life, including good healthcare for like, say 2% of that a year, like super, super low. So like, you know, I don't do public math as Sam and some other people say,
What is it? 2% of
0.02,
500?
10,000. If you could live on
10,000.
like, yeah, if you could live on like 1,000 to 1,500 a month with $500,000, like really though, a lot of people think they can, and then they end up spending twice that. I think that's maybe fine, but like, I don't know. For me, I just want to have a much bigger cushion. And I guess the question too is like, do you enjoy what you're doing, or are you working in a job that you can't stand and you're like, I just want to get out of here as quick as I possibly can? Because I think, you know, Trav and Nikki and I have talked about this, like, and people ask us like, when are you going to retire? And I'm like, what do you mean retire? Like, I am retired. We're doing what we love the most. Like, I couldn't think of myself doing anything else. Like, we've sat on a beach. I've taken many retirements. It's boring. I thought I wanted to retire a couple times, and it leads to depression. So you also have to make sure that like, you don't just like give up on life, because if you quit working and you don't have a purpose in life, that can be very depressing, and your life expectancy could potentially fall off of a cliff.
Yeah, well said. I mean, I think, you know, I guess specifically to the question, you know, he said he's 35 years old.
Yeah.
And, you know, again, I think a lot of it comes down to what you just said, like a 9 to 5 full-time job. You know, people like to poo-poo that and say, oh, you know, like you got to get out of the rat race. But some people love their job, you know, especially where you're getting like really good comp. You know, my brother is a software engineer, loves his, you know, traditional job. He gets great benefits, great pay. He gets to like do what he wants, like on the weekend. He has flexible schedule. So, you know, it's not like there's a one size fit all answer. But yeah, I think if you really enjoyed your job and you really enjoyed living where you are in the US, that could be the right answer. Or we've also had like opportunities to go abroad for months at a time or years at a time. And that is also an amazing experience. It just, I think it's such a personal question depending on what brings you joy and what brings you fulfillment. And if you have that ability, if you've got the capital and you've got the flexibility to kind of make that choice, you know, that itself is a great position to be in, because not everybody's in that position. So,
Yeah.
make a spreadsheet, make a list, you know, it's like, sometimes that's how I do it. Like, I'll literally just like map it out and say, like, I'll give everything like a score, like, okay, what's my quality of life, my income, my, you know, happiness day to day. And, you know, kind of score it out and see where you land at the end of it.
Absolutely.
Nailed it.
And
Nailed
there's
it.
there's also like a middle path, right? Like you could, like worst case scenario, say you do retire and you go somewhere and you're like, wow, this sucks. I miss my job. Odds are you could probably go back and get that same job or a similar one. Right. So it's not like you're making a permanent decision. And also there's maybe a middle path where you do go retire and you live somewhere cheap and you figure out a way to make a little money on the side and support your lifestyle, so you don't have to draw down on that 500K.
Great point.
But keep in mind that you can build a lot of wealth with a 9 to 5, you know.
True.
It can happen.
Yeah. All right. Next question. Crypto Clay. At what point does crypto legitimately go mainstream and the massive volatility ceases to exist? That is the $300
Oh.
trillion question, isn't it? I think the biggest narrative or the biggest potential driver for that is the ETFs. I think, ETF adoption is kind of the final boss there. And from that point, that's when a lot of people get access to Bitcoin in a way that I think is easier for the average, like mom and pop who doesn't want to deal
But
with
there's-
private keys.
There
What?
will probably still be a lot more volatility even with that, just because of,
Yeah,
there's so much volatility in Bitcoin that it being less volatile is still volatile. You know what I'm saying?
for
So,
sure. Yeah. Will it ever go away? Probably not.
Probably
Yeah, I
not.
think at a minimum, you've got to get to multi-trillion dollar, AUM in the asset class, and we're still a ways off of that. So yeah, I think you've got to get to the broad adoption where a significant majority of people have it in their retirement accounts, and that's a long way from here still.
Once Bitcoin has a price floor of like 6 figures, then maybe the vol starts to shrink.
Yeah, I think so.
Yeah, maybe.
All right. Stonk Rates is asking, are current housing market conditions as good as they'll get for first-time home buyers for the foreseeable future? Dude, I think this is a question that a ton of people are asking right now, right? Everybody that got like priced out during COVID, they're like licking their chops. Given that prices are down a bit, lots of people are on the sidelines waiting, and you can hopefully refinance later. Maybe this is as good as it gets, right? Yeah, I think this is a question that a lot of people are asking themselves, and they're looking at deals with like a 2-1 rate buy down going, hey, maybe I should just pull the trigger. You guys have any thoughts?
I think what people need to keep in mind, look, I think we are going to have higher rates for a bit longer. Will rates eventually come back down? Probably, right? Eventually the cracks will get bigger. But are we going back to where you could get a 3.0% mortgage again? I doubt we're going to see that anytime soon. I mean, I would imagine that's going to take multiple years unless we see a massive recession come, which, as you know, by listening to this today, we don't see that necessarily anytime soon. So I think that it's as good as it's going to get maybe for the next 12 to 24 months. And, a lot of people don't want to wait. They don't want to keep waiting and waiting. They've already been waiting. So just keep in mind that something you can always do is just pay extra towards the mortgage so that you can help pay less interest over time. That's always something you can do while you're also waiting for rates to change in the future so you could refinance down the road. But buy now with the numbers you've got now. If you can afford it now and you want the house, buy the house, and you can always pay extra towards the principal to save on interest over time, B, wait it out, and you'll maybe be able to refinance in the future, and it'll just be a nice bonus for you. It'll be just some extra sweets. So that's just my advice. I think that you got to also remember over time, housing prices go up. Housing prices are typically a good hedge against inflation. So there are other benefits there to owning a home. There are potential tax benefits if you have a home office. There are, potential tax benefits if you have high property taxes and a lot of itemized deductions. So there are things that you can, have to offset the costs of having that home. But look at the numbers. If you can afford it and you want it, this is probably as good as it's going to get for the next, I'd say, 12 to 24 months.
I think it's about like choose your risk. Right? Like if you get overextended now because you want to get in now and you overstretch on the payment now, you're risking rates not coming down and being stuck with that higher payment.
Right.
And then having to potentially sell for a loss or even a foreclosure, which sucks. I know, because I did that in my early 20s. It's not fun. You don't want to go through it. The other risk is you wait and then prices continue to climb. My opinion is, because I've done this, I don't think it's wise to be house rich and cash poor or get into a situation where you're struggling to make your payment. And a lot of people underestimate the costs, the true costs of home ownership, right? It's not just your mortgage payment, right? You've got PITI, principal, interest, taxes, insurance, but you've also got maintenance, which you know, if you live in if you're coming from a 1-bedroom apartment where maintenance is pretty much taken care of, you're going to a 3 or a 4-bedroom house, that is dramatically different. And you need to budget at least 1% of the property values per year to maintenance. Probably closer to 2% to be realistic. And then HOA fees and stuff like that. And then time, like mowing grass and opportunity costs. So if it's not a place that you absolutely know you want to be in for 10 plus years, and like you can comfortably afford the payment now with higher interest rates, you might want to think twice. That's my opinion.
I agree.
TD, I've got a question for you here.
Yeah.
Will life extension stocks replace current tech stocks in the coming decades? Do you think that maybe the driving narrative for the future decades is going to be life extension and biohacking and like pharmaceutical
Genetics.
companies and all that? And I know there was a big news piece that you wanted to talk about. Maybe this is a good segue into that as well.
Yeah. Well, I do think that there's going to be increasing focus on life extension, life quality, healthcare. And so I do think that is an area to put some focus on. Now, we don't have very many companies that are public that are specifically focused on life extension per se. We have pharmaceutical companies, we have different healthcare vertical companies, but not really very many companies that are specifically focused on therapies around like life extension. There is a lot of that work being done in privately funded biotechs, but I would say that one of the biggest trends that we're seeing play out right now is the weight loss drugs, the GLP-1, semaglutide. I know that's all technical jargon, but basically, if you look at these drugs that go by the names of Ozempic or Wegovy or Mounjaro, and Eli Lilly just yesterday came out with data on their version of a drug that we're calling Retta. And the data on this is absolutely like mind-blowing. I mean, the Eli Lilly data showed that in their study, in their phase 2 study of this weight loss drug, something like the median weight loss over just under a year period was 24% of body weight, or about 58 pounds on average. So these drugs, essentially what they do is they target appetite. And so they suppress appetite. And in so doing so, create massive amounts of weight loss, particularly for people who are overweight. And I know a lot of celebrities are even taking Ozempic to try to lose weight, to try to look good. But this is something that has the potential to be an absolute game changer in society and could have an effect on many different companies. You think about like Hershey, HSY, it's a stock that was recently trading at, a multi-year high. And you think about, well, what does this do to the sales of candy bars if people's appetites are suppressed? Now, some people are making the argument that actually it could increase sales of junk food because you have people not giving a shit anymore about their nutritional quality and being able to eat all the candy bars they want because they know they can lose weight and go on these weight loss drugs if they need to. I'm not sure exactly where that shakes out, but I do think this could have a significant impact on a lot of the diseases. Some of the top 5 killers out there are things like heart disease and diabetes. And so if you do have a large portion of society taking these drugs and actually starting to reduce body mass and body weight, that could actually extend lives and the average life in the US and other developed countries by quite a lot. And so that has an impact on things like housing. It has an impact on the overall economy's growth rate. It has an impact on anyone who, is serving individuals, particularly later in their lives. And so this is a trend that I think we're just on the front end of that is going to have massive implications over the coming years. So I'm just now starting to think about what that means, second and third order effects. But this is a really big deal. These weight loss drugs are a really big deal.
Yeah. I mean, I'm seeing a growing interest in just like, biohacking isn't new, but like, Peter T has been crushing it with his new book, Outlive. He was on Oprah and all that. And yeah, I think Gen Z is more into it. So I guess the specific question was like, does this replace tech? I mean, my opinion is it doesn't replace tech. It just becomes a part of tech, right? Like it's biotech, but there's going to be other tech. So maybe it doesn't displace other things. It just adds to the economy.
Yep.
I think so.
Cool. Yeah, well said, Trav. I don't know. Maybe I should hop on one of those drugs. I wonder are the side effects bad? Is it going to give you cancer in 5 years or something weird?
I think we're still finding out. I think we still don't know the
Ugh.
long-term side effects. I think some of the shorter-term side effects were like gastrointestinal issues.
Yeah.
Some people have had things like higher, higher heart rate and blood pressure. But generally, you would think for most people, losing a lot of if they're overweight and chronically obese, losing weight would actually ultimately be a net positive. So we'll see. There will, I'm sure, be some side effects for sure. And I don't know about the cancer stuff or the other long-term stuff, but hopefully, knock on wood, it's not too terribly bad.
Yeah. I don't know. Maybe I'll just stick to working out and trying to eat healthy.
That's definitely the way to go for not only health, but quality of life and
Yeah.
general energy levels and things like that.
Awesome. All right. Kernal was asking, does Bitcoin dominance matter in this current Bitcoin bull run? Hell yeah, it matters. And I've been talking a lot about it in the community. Bitcoin dominance is basically the percentage that Bitcoin is of the overall crypto market cap, right? So say the crypto market cap is $1 trillion of everything and Bitcoin is 500 billion, then it's 50%, right? That's an example. And you can see here back in the early days, prior to the ICO bubble in 2017, it was mostly Bitcoin and a little bit of Ethereum and Ripple and a couple other shit coins that are mostly dead now. But it fell off a cliff. It went from basically 100% down to about 40%. And over the past couple of years, it's been bouncing around in this tight range in between 40 and 50%. And then most recently, it broke out above 50% and has been moving higher. Now, what does that mean? It means that people have been selling altcoins for Bitcoin. And this has been my narrative to the community for the whole year is I think we've been in a very high regulatory risk environment for altcoins. No surprise, right? The SEC is suing everybody and going after Binance, which is the biggest exchange player in the altcoin space. And also suing individual projects, other exchanges like Coinbase, et cetera, right? So there's been this quote unquote flight to safety where people have been dumping shit coins for Bitcoin. And we see this during every bear market and the start of every bull market is capital flows into Bitcoin first. People see Bitcoin number go up and then they go, oh, if Bitcoin went up, maybe other projects prices will go up. And then you see other things like Ethereum and other large caps go up second. And then that capital filters down to smaller projects and ultimately the scams. And then that's where the market cycle ends. So yeah, I think keeping an eye on Bitcoin dominance is very important and it is a driving force. And I've been telling people really since back here in March that, hey guys, I don't think we're going to get an alt season. I think alts, whenever I look at the valuations of a lot of these alts, a lot of them still have $100 million plus market caps that are basically dead projects that have no development, no use case. And why are they trading at this value? Those bag holders are going to bleed out and people are going to sell to try to recoup whatever value they can out of that. And that's what we're seeing. And that's why Bitcoin dominance has been going up. Is it a surprise? It shouldn't be. Unless you've been smoking the hopium from some shitcoin, but that's why I'm not an altcoin investor, right? I trade altcoins to accumulate Bitcoin and accumulate dollars. I'm tactical. I'm in, I'm out. Yeah, so that's that. All right, moving on. Next question. Fed says no rate cuts this year. Do you believe them? Is that true? Did they say that? I don't know if they said that.
I mean, they're saying 2 more hikes this year, aren't they?
That's
so yeah,
the latest.
Yeah,
that's what their dot plot would suggest, their projection of where the federal funds rate should go. But, if you'd asked me a month ago, I was very adamant that the Fed will be likely cutting rates this year and that they certainly shouldn't be hiking beyond, say, the June month. But, with the extra strength, with the extra wealth effect from stocks and crypto being up and the economy clearly improving on a lot of different measures, I think maybe the odds of a rate cut are lower, and the market's probably right about that. Now, as far as July is concerned, I think that's still up in the air. Like July, the market is pricing in that the Fed is going to hike 25 basis points. But again, I'm really confused why that would happen. If the Fed gets the June CPI number a week or two before the Fed meeting, and it comes in at 3.22, down from 4 the month before, and you have things like energy prices still declining. I'm just not sure what gives them the need or the rationale for hiking at the July meeting. Remember, they just paused in June. So I'm still confused. I'm still confused as to why the market is pricing such a high probability for a hike in July. Obviously, it's based on what the Fed is out there saying in some of their speeches, but I'm just not sure I fully buy that the rate hike is going to be done in July. And I think it will be a mistake if they do it. Now, I have to acknowledge I've been wrong, that it does increasingly look like the Fed, unless we come into some sort of crisis situation again in the banking system, it does seem like they're going to have at least some cover to keep rates at the current level for a while. Again, a lot can change between now and say like the November meeting or the December meeting. So I don't think the probability should be priced at 0 of rates being cut back, particularly when we get that pressure from rent prices coming down in the CPI. If we're at 1 or 2% CPI in October or November, is the Fed really going to be up at 5.25%? I think that would look pretty insane. So yeah, in summary, I think it's unlikely that we're going to see rate cuts this year, but the probability is not 0. And I think on the flip side, this idea that we're still going to be in a hiking cycle, I think that is still wrong. I think unless the Fed does something really dumb, we're done on rates. So we'll see.
Now,
we'll see how it plays out.
Here's the question, Trav, I have for you.
Yeah.
At this point, let's say they go another quarter. What does it matter at this point? How much is that really going to affect our current situation and how the market reacts? Like, we know we're close to the top for the most part.
That's a great point.
It's like, is the extra 0.25% going to really do that much to bring everything down and change the whole narrative?
It's a great point. I think your point is well taken. And you're essentially saying if we're not at the end of the hiking cycle, we're almost at the end, and 25 basis points, from 5.25 to 5.5 probably won't make a difference for most firms and most individuals. But it could put a little bit incremental pressure back on real estate, especially when you get into the seasonally weak periods for real estate. Like if we get into the winter timeframe and the Fed is way, way high on rates still, and they've hiked in July, I think maybe you could see a renewed downturn in some prices in some markets in the weaker seasonal periods. So you could have some incremental effects, and who knows, maybe it'll do something weird in the banking system. But I think you're generally right, which is we're arguing over like,
peanuts at this
minor
point.
Peanuts. Yeah, exactly.
Yeah. That's what it's starting to feel like, at least.
Yeah.
All right, guys, buckle up for this one. Why do you guys live in the US since it's a disaster for taxes for people like you?
It's actually not that, not that bad.
Dream Crypto. Sometimes I ask myself that question. No, in all seriousness, I think this is a good question. This has been a question that I get a lot from US crypto traders and investors that have been considering expatriating or renouncing citizenship, because we are, I think, still the only country where it doesn't matter where the hell we live, the US is going to try to get their tax dollars from you. Nikki, take this one, please, because I don't know.
Okay,
part of me is like, okay, go ahead.
Okay, there are certain countries that have more favorable capital gains treatment and tax treatment, right? But yeah, Americans are screwed no matter where we live, unless we basically renounce citizenship. We got to pay taxes. So the workaround for that is we have a pretty decently low long-term capital gains rate. Like it maxes out at 23.8%. Technically it's 20%, but there's a 3.8% extra tax if you make a lot of money that people don't even know about. So like, okay, 20%, that's not the worst thing ever. If you can manage your capital gains the right way, it's not the worst thing ever. It's not the greatest. I know there are places that have 0% capital gains on crypto, but like we can't live there easily. Like we would have to.
Yeah, I have one overarching thought on this, which is like there's no perfect place, at least that I've found so far. It's like if you go to lower tax jurisdictions, like even if you were to give up your U.S. citizenship, which is I think something that you're essentially saying is like something that we're unlikely to do, at least right now, unless things get really bad in the country, because we like being able to come back and see friends and family, and those ties are real. But even if you were to finally decide you were willing to renounce your citizenship and give it up, you know, you think about, well, where would you go and where do you have the best combination of lifestyle and low tax rates? And when you look at the low tax rate jurisdictions, you know, there might be things that aren't great about it. You know, let's take something even like Puerto Rico. You know, Puerto Rico has to deal with like hurricanes and wildfires and hot weather and, you
power.
know, the most beautiful place, one of the most beautiful places on the earth, a place like Switzerland or say New Zealand, you're going to have high tax rates. And so finding that combination of perfect place is really difficult. And then you add on the factors like, you know, the people that you love and care about that you want to see, you know, where are they going to be, where are your business ties and your, you know, just all these relationships that you form throughout your life and things like memories and family and friendships. That I think is also something that makes it difficult to just up and go because of optimizing your tax rate. Optimizing tax rate is only one part of a great quality of life.
I think
I
that's
agree.
a great point. And look, we've traveled a ton over the past 15 years, right? Like I've seen a lot of the world and I can't think of a single place that I'm like, yeah, I want to be here all the time, full time, or like I want to have my residency, my citizenship, my money. I want to have everything in one place, right? Even in the US, we diversify where we go and we're not here full time in the US. I've done the pros and cons lists and I just it doesn't make sense to pull the trigger on completely giving up citizenship in the US. Maybe if I had no family and, you know, no friends and I didn't care about coming back, but I do. And so, yeah, I think that's the big breaker for me.
This is why tax strategists like me exist. I'm just, you know, that's why I do what I do. I'm looking for the little ways we can save money on taxes and just make our effective tax rate as low as possible.
Yeah. All right, cool. Next question. Mission Man was asking, what are your thoughts on the future of El Salvador's real estate market? Do you think they could be the next Singapore? By some would it make sense to buy a jungle for a few bucks and get a 10,000x return in 20 years? You know, I like where your head's at there, Mission Man, like trying to think about, because yeah, I mean, Singapore is definitely a shining example of what was turned from swampland basically into one of the financial hubs of the world. Is El Salvador going to do that? I don't know. Do you guys have any opinion on El Salvador? I mean,
I don't know a damn thing about El Salvador. I've never been there. I don't know what it looks like. That's one of the countries that I have not been to. So, well, I don't know.
The thing that they do have going for it is Bitcoin adoption. And, you know, let's just run through a couple scenarios, right? If Bitcoin goes to 6 or 7 figures and it becomes a financial hub for crypto, yeah, that's a bull case, right? I don't know, Trav, you want to go buy a jungle?
I mean, if it's cheap.
Yeah, I don't know how to manage that.
Yeah.
It's an interesting thought though. I like thinking about the idea of, is there another Singapore out there though? You know, is there a place that's so committed to improving, they're going to go from third world to first world in the next 2 or 3 decades? Singapore is an amazing example. Even South Korea to some degree has somewhat been on that path over the last 40 or 50 years. So I like that thinking. I haven't studied El Salvador enough, so I'm not sure. I'm not sure where I'd put those probabilities today, but I think if you were pretty certain that it was headed in that direction, that absolutely buying real estate would be a good idea, you know? But again, I don't actually know if that's true about El Salvador or not.
It definitely looks like an asymmetric bet because they're coming off of like a really bad gang problem, as I understand it. And yeah, now might be a good time to buy. I know nothing about the current state of the real estate market there, so I don't know if things are still cheap or what. But yeah, I mean, it could be even if the probabilities are low, it could be like an asymmetric bet where, you know, if you buy some cheap property next to potentially some gentrifying areas or potentially like some Bitcoin hubs, yeah, I kind of like it. I think it's a potentially low risk play. Like if you can pick up some property on the cheap, why not?
Yeah. Assuming the property rights are respected and that part of the equation is also,
That's
in
the
your
big
favor.
caveat, right? I mean, dude, I've been all over looking at real estate. I was, I had so much, I was an idiot. Okay. So about 10 years ago, I went to Myanmar after it was like opening up for the first time in like 50 years or whatever. And I'm like, I'm going to
Oh,
go
I
in here
remember
and
this.
buy some cheap land. And I actually flew up to like one of the more northern parts. It was a beautiful beach. It looked like Koh Phi Phi in Thailand, which for anybody that knows is like one of the hottest tourist attractions in the world. It's like the most gorgeous beach. And there's beaches like that in Myanmar. And there, my buddy had been living there like for a long time. Even when they were closed, he was a missionary. And he's like, Chris, if you come up here and you buy up like a couple miles of these beaches in 10 years, you're going to be a billionaire from this stuff. And I'm like, all right, cool. I'm game. I'll go check it out. Because there was like a Hilton or a Four Seasons or something that had built a resort out here in the middle of nowhere. I'm like, well, if they built there, obviously there's something to it. So I went out and yeah, there's gorgeous coastline. I was talking to like farmers and fishermen that apparently owned this land of like this mile stretch beach. And I'm like sitting there on a coconut shell, like negotiating like how much per acre and stuff. And I'm like, what the hell is happening? And the more I looked into it, I was like, oh yeah, there's absolutely no way that this government would ever respect these property rights. There's no legal way for me to own this property and to protect it. And if I put $1 million here, it could go up like that. And as we saw over the past couple of years with the coup over there, yeah, of course, like you got to be really
Dodged a
careful.
bullet.
Yeah, dodge the bullet and literally probably. Yeah, I mean, you got to be real careful about property rights in places because in the US that's protected pretty well. But in some of these second or third world countries, not so much. All right.
Especially foreigners buying property.
Yeah.
Yep. We've been going for quite a while. I know we got a couple of questions here from YouTube. Let's see. With let's see. With warnings from creators in position like the early internet, where are the opportunities for early investing in AI? Yeah, we've been talking a little bit about AI, and that's I think a very difficult place to play right now. I don't know. It's, obviously OpenAI and Google. I mean, any place that you can get exposure to a public company that's being a big player, NVIDIA, Microsoft, Google, blah, 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 right? As far as startups go, I mean, OpenAI is basically the hottest thing in the Bay right now. Trav, have you seen anything on the startup front or even in the public markets that is real juicy and not just overhyped?
Public markets, there isn't that large of a group of companies that I think are pure plays on AI that are worth investing in. We have actually quite a few junky companies that are AI plays, and they've been doing well. Their stocks have been all doing pretty well, but I don't think those are long-term winners, a lot of them, because a lot of them are over dramatizing what their true capabilities are. So
Yeah.
there's not even that many companies in public markets. And of that universe, even fewer are worth investing in long-term. But in the private markets on the angel side, there is a tremendous amount happening there in terms of funding, in terms of activity of companies being created. That's difficult because you have to be an accredited investor and you have to know your way around angel investing, which is extremely risky. The return profile of angel investing is like, 7 out of 10 will be failures. 2 out of 10 will return your capital, and 1 out of 10 hopefully will be like a mega outcome, 100x or multi-hundred bagger, so that you more than make up for the losers, and you end up with a good return overall. You've got private companies that are increasingly getting capital. We just saw, I think, like it was, Jasper took funding. Scale AI will probably come public at some point. You've got companies like Descript and Runway that have recently raised funding that look like interesting companies. It's just like most of us won't be able to get access to those for a while until they either come public at a high valuation or maybe you can find something at an early enough stage if you're an angel investor to invest in. It's just really difficult. Again, I'd encourage you, if you are an angel investor, go poke around the space. There's definitely stuff happening and companies being created and funded. See if you can get into the rounds of some really, interesting ones, if that's something that you want to do. But, you got to know that that's a different risk profile than, say, investing in public companies. Personally, I find it a really difficult time right now to to invest, because we're in this weird in-between phase where the companies that are already public are either large and already, rocketing higher like Nvidia, or the crappy little ones that like really shouldn't even have that much hype, like a C3 AI. So I'm kind of going to wait for some of these companies that are mid-stage to come public and then filter through those once we get an IPO cycle and figure out which ones of those are worth owning.
Well said. And if you are an AI entrepreneur and you think you are at a place in time where it makes sense to raise some capital, shoot me a DM on Twitter. I'm starting to get more active on the angel side again. I took a few years off. Sometimes I'm active, sometimes I'm quiet on that front, but I do want to step back into that space and help a handful of meaningful companies scale over the next like 3, 5, 7 years, whatever it takes. So
nice.
Yeah, dude, let's do it. All right. We've been going for well over an hour now, so we could probably wrap it up there. But before we do, what is coming over the next week? What should people be looking out for? What can we do to grow our dough, Trav and Nikki?
Funny you should mention. Well,
Yes.
stocks are going to be relatively quiet. I mean, we have had some pretty rip-roaring green days, but the market's going to be closed for a day and a half next week, and there's just not a lot of catalysts. So we'll start to get into more exciting times in July when we get things like the CPI release, the Fed meeting, earnings season. So late July is really when things are going to kick back up in stocks in a big way. Until then, I think next week could be a little bit of a snooze fest. But outside of that, of course, we've got some stuff on our side that that we're working on that I think we're pretty excited about. But I don't know if we're ready to announce it yet.
Something cool coming for everybody. Keep an eye out.
That's right.
And then on the Bitcoin side, we've got 30K resistance that I'm keeping a really close eye on here. If you want to get my updates and watch list and alerts, go to wetalkmoney.com/community, come in our Discord channel and hang out with us and come to our live classes. Also, thanks to Koifin for sponsoring the show. This is a great platform for doing equities research and just setting up different market dashboards. You can check a link out in the description. And yeah, Nikki, any final thoughts?
Well, I was going to say, I am hosting a wealth coaching meeting for wealth building community members on July 12th. So if anybody wants to get in on that, we're going to be discussing trusts, like asset protection stuff, which a lot of people are pretty interested in. So if you join the community, you'll get access to that class and you can get half off of your first subscription with the promo code BuildWealth. So go to wetalkmoney.com. community, use the promo code BuildWealth, and I've got a class coming at you on July 12th.
Awesome. Well, thanks guys for watching or listening to the show. Don't forget, leave us a review, like up this video, share it with somebody that you think could get value from it, and we will see you next week. Take care, guys.